Hi everyone and a very good afternoon. You're watching the newsroom on ET now. I'm Mubina Kapasi. Let's take a look at what the markets are doing. Well, we've slipped off from the 11,600 mark, but still sitting on gains of about 0.25%. Remember, it's expiry day as well. So that too is going to keep the markets in focus. Well, meantime, let's talk about IGL, which has delivered its Q1 numbers. Revenues at 692 crores, close to halving, margins compressing, and the profit after tax came in just at 35 crores. COVID impact, obviously, taking a toll. Let's bring on board Mr. A.K. Jana, the Managing Director of Indraprastha Gas. Thank you so much for joining us. To start with, take us through the impact of COVID on your business. I mean, it's clearly evident on your financial numbers, but on ground, what sort of a hit did your operations take?
If you see that the year started with a lockdown, and in the month of April and May, complete country was standstill, and our business has gone down to 20%. Now, gradually, it has come up today, it is around 80-85%. In spite of this April and May, there was entire restrictions was there. Only the movement was there only for the essential services. And of course, June, we could reach to our 71% level. And on an average for the quarter, we are down by 57% only. So that is the reason basically behind of this. It is because of only the COVID-19.
All right. Mr. Jana, let's talk then about when do you expect volumes to recover to pre-COVID levels? And what can we expect from FY21 in terms of volume growth, if you could break it down between CNG, industrial PNG and commercial PNG?
You see, primarily there are two sectors. One is the PNG, another is the CNG. PNG, if you see that, we are back to 100%, even more than that. No, even though there is a, you can say, reduction in the commercial sector, that is around 40% we could achieve today till date. But to compensate that, since the restaurants are not operating, people are basically taking the food, homemade food. So as a result, the gas consumption has gone high in the domestic sector. It has gone up to 130 to 139%. So PNG, if you see that, it has come to the normal operations of more than even 100%. Now coming back to the CNG today we are operating at a level of 80 to 85%. Around, we normally sell 30 to 33 lakhs kg per day. As against that, we are achieving 28. Sometimes also we are achieving more than in one day sale, more than even average of the last years. So we are expecting by end of this quarter, we'll be able to achieve the 100% once the institutional like school and institutions are open. Probably we'll be able to meet 100% sales.
All right. Mr. Jana, the IGL CNG price hike was roughly about 40 paise per kg on the 8th of May, and as on 10 July, there was another 80-90 paise per kg revision. So if you could talk to us about the impact of these price hikes on margins?
See, price, we are deciding on mainly three factors. One is the input cost for the gas. Another is the OPEX. Okay, how much cost I am incurring. And third thing is the to maintain the assets, what is the cost we are incurring, that is the OPEX. And the third one is the currency variations. So if you put together the cost for maintaining the entire assets, IGL is having the highest, biggest assets in the CGD sector. We are operating more than 15,000 kilometer pipeline in the city itself and 555 CNG stations. So we need to keep them all the time, looking from the safety point of view, and the operations we have to keep all the time intact. So O&M expenditure more or less is the same basically. Now to compensate that, not to compensate that, the OPEX part has gone up. Because of that, the per kg we are required to increase the price. And it is a marginal increment. If you see the alternate fuels also, they are also increasing. So as compared to them, we are we are taking care of our customers also. So we are keeping minimum price increase so that customers are comfortable at this situation.
Okay. The COVID impact, the shift of customers to private vehicles due to COVID, and what the impact could be on volumes, as well as the impact of lockdown on conversion of vehicles to CNG.
Yeah, it's a good question. See, today there is a mandate for the public transport, but we all are now concentrating more on the private car because of this social distancing, and the price difference is very high. So people would be going by their own car, self-driven car. People will be preferring that, and we are working with the manufacturers and the kit manufacturers so that the private people, they are attracted for converting their vehicle, or they are buying the CNG vehicle. So if you see that because of the social distancing, to transport the equal number of passengers, probably more number of frequency would be there. As a result, the CNG consumption will be going very high, number one. Number two, people will be coming out with their own car, and since the price difference is very high with the alternate fuel, people will be preferring to go for the CNG. And every year, every month, there was basically before COVID situations, around 5,000 cars used to be converted, and out of which 2,000 from factory fitted, and 3,000 is basically the kit conversions. So that we are expecting by end of this quarter, by beginning of October, we are expecting that the factory fitted car would be around 4,000 and 6,000 the kit fitted CNG car. So every month we are expecting around 10,000 car would be there in the market. So that will give us a huge boost, and with this probably will be surpassing our CNG consumption what we used to do prior to COVID situations.
Okay, all right. Let's talk about the fact that the centre is planning to open up the city gas distribution business to competition, which will perhaps end the monopoly of IGL in Delhi and Mahanagar Gas in Mumbai, as consumers now will get to pick the operators of their choice, right? And this development has been in the works for quite some time. So how do you see this impacting your business?
Yeah, this is a part of, you can say, part of the reforms to bring increase in the natural gas business driven by the government. And at the same time, government is forcing entity to perform. And by way of putting some penalty through the PNGRB, if you are not able to put up the sufficient assets, infrastructure, what you have committed, then the penalties are there. So opening the market after exclusivity period, this is what predefined. And we have to accept that. But the fact is that the regulator, he has to see interest for the both, the infrastructure provider as well as the customers. So I don't foresee there will be huge impact on IGL, as because we are operating here more than 22 years. People are satisfied even during the lockdown when there are no movement. All the assets were intact, and without any interruption, supply we have maintained for the individual houses. More than 16 lakh houses are getting the gas without any interruptions. And the second thing is that all the CNG stations we kept ready to fill the cars also. So people are used to get trouble-free operations from IGL. I don't foresee people will be shifting to some other entity where the credibility is yet to be established. And as regard, definitely the pricing mechanism is there. All the time we are taking care of our customers. So I don't foresee there will be huge impact on us, not in the near future, basically.
Okay, and finally, how do you see revenue and profitability for FY21? If you could also, if possible, share some visibility for the next year, that's FY22, and which segments will contribute the most to profits?
Typically in the CGD sector, those who are operating more than 15 to 20 years, they are heavily depending on their business revenue comes from the CNG sector. And if you see that today we have reached to 80-85% of our pre-COVID situations. And we were expecting that we'll be getting in the Q3, but the way things are moving, we are expecting by end of this quarter, we will be reaching to our earlier level. And then I have two more quarter to do some aggressive marketing by which we can compensate what we have lost in the quarter one. So that is our target, and we will be working with the manufacturer and how we can attract the private players to come on this CNG business, CNG vehicle. So that is our target, and by end of the quarter three, probably would be able to surpass our volume.
Great. Mr. Jana, all the very best, and thank you so much for joining us today on ET Now to talk about your numbers. Okay, IGL is a bit low in trade, but let's talk about the other big movers and shakers today. First up, starting off with IndusInd Bank. Look at the rally being witnessed in the stock. In fact, the Nifty Private Banking Index itself is higher by more than 1%, and it's IndusInd Bank that's really taking that index higher. This entire week has seen a stupendous rally come by for the stock price of IndusInd Bank. So we started off with maybe 515 odd rupees, and now it's been almost an 80 rupee rally just the last 1 week. The stock is currently perched at 608 rupees. Massive leap seen in the stock price of IndusInd Bank. Moving on, another counter that continues to rally on the back of the news, or rather the commentary when it comes to debt, is a Tata Motors. Again, a great move being witnessed in the last 1 week. The trigger, of course, being with respect to, Mr. Chandra saying the debt levels are too high. He put a timeline as well as to how he wants, or rather by when he wants to cull down debt to a perhaps more sustainable level. So the stock price went from 120 odd rupees to now 145. It's the third straight day of a rally being witnessed for a Tata Motors in trade. Okay, take a look at Godfrey Phillips, and we are going to see these sin stocks, as we call them, or cigarette and tobacco and liquor stocks in focus as the news around the GST Council does take dominance over there. Plus, we also had a very interesting note that came in from Centrum today earlier in trade. The Centrum Broking has maintained a buy call, as they say that the company has said it will continue to expand chewing and confectionery product offerings to suit varying consumer tastes and preferences. Remember, of course, the company as well had conducted an earnings presentation, discussed plans for the future. They spoke about how it aims to strengthen partnership with Philip Morris International, for the Marlboro brand, which is, of course, the key, maker. And then, of course, we did have the numbers, a 40% decline on the top line and a 54% decline on the consolidated PAT. So that's, of course, Godfrey Phillips, a massive rally being witnessed over here. And then, how can we miss out on realty stocks? The Maharashtra government has given a maha booster to the realty sector by cutting GST from 5% to 2% till 31st December, and then subsequently 3% till March 2021. And on that note, we spoke to Niranjan Hiranandani, one of the premier realty developers in Mumbai, on his views on how this will come as a big relief for the realty sector. Listen in.
See that they brought it down to 2%. It will make a huge difference in terms of the demand position. We already had in the last 3 weeks a lot of inquiry levels, but people were on the edge to decide and not decide to buy. I think this is going to bring back demand, and real estate, if it comes back, when it comes back, you will see a multiplier effect in 269 industry. So I think for the first time, Maharashtra government has taken the initiative to bring a demand push, which was very necessary. We have also asked for GST cut from the central government and also the GST Council. And we are hopeful that something will happen there, not only for real estate, but also for the other industries, in order to see that the demand is pushed across. So whether it's automobiles, whether it's real estate or others, the GST cut across the board will make a huge difference. And I promise you, you'll see in January, the economy will spring back irrespective of everything. This is really a medicine bigger than the COVID medicine that you have for the purposes of the economy. So this is the first demand-side COVID vaccine that you have given to bring about the economy. So I consider the cut as a vaccine for the economy to manage the COVID downturn.
Okay. Well, moving on, another big event is, of course, the August expiry series as well. We're going to see a lot of action come by in the stock markets in these remaining 2 odd hours that are left in the trading session. So, how did the August series fare? Let's go across to Jayesh Khilnani.
The August series has been a good one for both the Nifty as well as the Nifty Bank. Both of these indices have managed to gain for the third series in a row. Also, if you have a look at the market rollover picture, that has been quite robust. The Nifty's rollover stands at about 65% as compared to 60% 3-month average rollover, while for the Nifty Bank, it stands at 54% as compared to 3-month average of 52%. Also, if you have a look at the sector performance, the broader market space has been doing extremely well. Both the Nifty mid cap and the small cap index are set to perform more than double-digit gains for the August series itself. The leader has been the media sector, which has gained more than 20% for the series itself. And some of the other sectors that have managed to clock in double-digit gains for themselves would be the media as well as the real estate and the auto pack as well. The two sectors that have not performed well are the IT as well as the FMCG pack. Both of them have managed to underperform the Nifty as well. The India Wix index that has declined more than 20%, and this is one of the worst performances that we have seen from the India Wix index as well. Now, if you talk about the individual stock gainers and losers, we have quite a few auto names that feature in the gainers list, the likes of Ashok Leyland and Tata Motors, which have managed to gain more than 30 to 40% each. Also, Adani Enterprises has gained more than 60%, while Z Entertainment from the index stocks has gained more than 50% for this series itself. And you have JSW Steel also, which has gained more than a third of its value as well. The stock losers are talking about those. You have a lot of high beta names, the likes of Bandhan Bank and Muthoot Finance, which feature in this list. And you have Bharti Airtel and HDFC Life from the index names, which have also contributed significant losses in the series, August series itself. However, it is interesting to note that there are 3 additional stocks which go out of the F&O space effective today, which is Century Textiles, Ujjivan Financial, as well as Equitas Holdings.
All right. Thank you, Jayesh, for that. We will slip into a very short break right here on the show. Don't go anywhere.